Hello and welcome, dear listeners, to another exciting installment of Keys to the Castle. I'm your host, Bisendra Melaram, and today we're diving deep into a topic that's often shrouded in mystery, but plays a vital role in every real estate transaction: title insurance. Joining us for this enlightening discussion is a true expert in the field, Sue Baran from LB Title. With her wealth of knowledge and experience, Sue is here to guide us through the intricacies of title insurance, unraveling its complexities and shedding light on why it's an indispensable component to any real estate deal. But before we embark on this journey, let's introduce our esteemed co-hosts. Alongside me today are two industry veterans whose insights never fail to impress. Real estate attorney, Jason Kleiger.
Oh, yeah.
And mortgage professional, Jason Marcus.
Hey.
Together we form a powerhouse trio ready to unlock the secrets of title insurance. So whether you're a seasoned real estate pro or a first-time homebuyer, buckle up and get ready to gain invaluable insights into the world of title insurance.
Unlocking doors to your dream home. Keys to the Castle takes you on a real estate journey like never before. Welcome to the podcast where every key opens a door to possibilities.
Let's kickstart this episode of Keys to the Castle and unravel the mysteries behind securing your piece of the real estate kingdom. Sue, welcome.
Thank you.
What's up, gents?
Living the dream.
Word Up Magazine.
I don't remember what I was doing 15 minutes ago, so that's what's up.
That was a long intro.
Yeah, thank you.
Yeah. I got to get it shorter again. I think the shorter ones were better.
I like that one. It was comforting and homey.
I just can't wait to hear what Sue has to say.
Yeah, well, it's
Yeah.
got to be comforting because you got to be comfortable with your title insurance.
Oh, title insurance is crucial. But go ahead.
That's a nice ramp up.
Sue, so tell us a little bit about yourself.
Well, let's see. We can start from the very beginning.
Sure.
When I was born. No.
Well, maybe not that far back.
We'll just go back. I'm a graduate of Queens College in Flushing, and I first started out as a journalist and decided to then change the game a little bit, and I went into title insurance, starting at a known title company, Title Guarantee, very old title company, which ultimately became Ticor Title, which then merged with Chicago Title, which then was taken over by Fidelity Title. And then I went the abstract and then formed my own title agency, Land Baran Abstract, and then Landbound Services.
Interesting. So how long have you been, if you had to put a number on the number of years you've been in title, how many years would you say that would be?
I started in 1986.
Okay, she didn't want to tell us the years.
Well, do the math.
Yeah.
38 years.
Yeah. That's a pretty long time.
I wasn't born yet.
Oh,
I hate you.
boy. Oh, boy.
Why'd you have to throw that in
I
there?
know. It's like
I mean,
so
that's-
unnecessary.
That just shows the gravity of your experience, though.
I guess so.
Yes, I'm sorry for that.
I'll forgive you.
So for those of us that don't know, what is title insurance? Because a lot of consumers, buyers particularly, do not understand or know the term title insurance. I find that they get it confused with my name is on title, meaning their name is on the deed.
You know, actually, they get it confused with homeowners insurance. And
What?
Yeah, they do. Yep. The first thing is homeowners insurance, and you got to kind of like back them out of that and then explain what title insurance is and explain to them it's a one-time premium, unlike homeowners insurance, which is a yearly premium. So this is a one-time premium for however long you own the house. And that's it. So to me, it's one of the best investments out there. The premium is not that high in comparison to what you pay for homeowners insurance on a yearly basis. And you're covered for any defects in title. You're covered for your home ownership.
Right. So let's talk about that, defects in title. Explain that to us a little bit. Because
So I can give you two defects. The first would be you're buying your house from John Doe, Jane Doe, and you get a deed, okay, into your name, only to ultimately find out that it was a fraudulent deed. So if you didn't obtain title insurance, then you would not be insured. And in that respect, it could become very difficult because you literally will lose your investment in the house. Because if John Doe and Jane Doe were actually over, snowbirding in Florida, and you had somebody else portraying them right down to fake identification, and you didn't purchase title insurance, and mind you, in the 38 years that I'm doing this, only twice did I have somebody say, we're not going to purchase title insurance. And the attorneys representing them whip out hold
CYA.
harmless, an actual hold harmless, an indemnity saying, if you're really not going to purchase this title insurance for $2,100, I'm going to be covered and you can't come back to me for not only just that, but let's say you're buying a house and then the seller's mortgage is being paid off and something happens and the seller's mortgage does not get paid off. The check bounces or FedEx never gets it there, or the wire for some reason has a blip in the number and it never gets there. Well, you know what? You got the seller's mortgage on your property.
Right. So here's the thing. And correct me if I'm wrong, Mr. Marcus. Do banks not require title insurance? Do they not want to see the title report?
Oh, they
Absolutely.
1,000% want to.
Oh, because they've got the same interest.
They have the same interest.
Yeah, they got
The
the
only thing is that the bank doesn't have to pay for the title insurance.
Right.
The onus falls on the purchaser/borrower to pay for both the title insurance, the owner's title insurance, and the lender's title insurance.
Because there's
policy.
two different pieces to the
Right. But you get what's called a simultaneous rate when they're purchased both together.
And just to buttress off of discussing what attorneys do when their clients refuse to buy title insurance, I've told clients that I refuse to represent them. Not just, here's a CYA, sign it saying that I disagree with you or I'm advising you to purchase title insurance and you're not. No, I don't do that. I say I will not represent you.
So
And
get
then,
up and walk out.
yeah, I will. I will get up and walk out. It's happened a couple times. They say, oh, we don't think that's necessary. And I said, all right, well, I'm refusing to represent you going forward. And they always come back. And then they buy title insurance.
It's
But that's
just
how,
nonsense.
that's how important I feel title insurance is. I mean, obviously, if I'm willing to drop a client for not doing that, then clearly it's something that is 100% necessary.
Fist pump.
There we go.
So you were telling us about that story where someone fraudulently took title of someone else's property. What other good story do you have?
Oh, and I have several, which actually.
Pick the worst one.
I
I want the worst one.
ratings.
No, it's not even. The worst stories are the best story.
So I had a power of attorney. Attorney, in fact, was the son. Father gave the son the power of attorney, and he was refinancing. They were refinancing. They both owned the property collectively, and they were refinancing, and only the son was on the note. He's the only one that had the promise to pay, so they didn't have to run the father's credit. But the father has to join in on the mortgage, the security instrument. So that's why the power of attorney was created. And the power of attorney was fraudulent. And the son had actually had his friend notarize it without being in front of the dad. And the son provided his friend with his dad's driver's license because they lived together. And then when the father found out that now all of a sudden a $300,000 mortgage was going onto the property that had originally been paid in full, his son had a gambling habit. It was a claim.
Have you ever been in a situation, because I've seen it, where let's say that type of scenario occurred where the father wasn't in the right mind, where you as a title closer actually stopped the closing because you're like, this person cannot make decisions
And
based
that
on.
has happened as well.
Yeah, because I've seen that happen
Yes.
once where it's like clearly
Yeah.
this person was just not in their right state of mind, and
In
one of the
that
children
case,
was trying to play the
a
game.
special power of attorney with, for competency if if they're not competent, because you do have that as well.
Well, certain POAs, they, supersede someone being incompetent. So if someone is incompetent, you could still use a POA for that purpose.
Only if it really does depend. The
Yes.
power of attorney has to
Say it in there. Yep.
Say it in there.
That's interesting.
Yeah, very interesting.
Walk us, Sue, through the process of getting title insurance. What has to happen on your end?
So
you get
the application.
From the application. So an attorney calls you up.
So
How do
generally-
people find you?
Yeah. So generally, the rule of thumb is the purchaser's attorney will order the title insurance. However, in the last 3 years, there's been a push for actual buyers to do their own research and not necessarily go with what their attorneys pick. And we've had a few of those.
Yeah, because, well, I consider myself, having above average knowledge. I know that you can shop your title insurance.
Right.
I mean, I'm also in the business.
Yeah.
So I knew from a very young age you can shop you don't have to use the suggestion or recommendation of an attorney. But I would always take Mr. Kleiger's advice.
The reason that you would follow your attorney's lead on it is because generally they have a relationship with this title company and they can navigate quickly.
Mm-hmm.
They know who to talk to, the clearance counsel, the recording clerk, the processing department. They know the people. Oh, and quite frankly, a lot of people just call me directly. Hey, Sue, listen, I got this problem. I need this title. Rush. Can you get it to me in 24 hours?
Mm.
Yeah. So we can jump through hoops.
So let's go with your protocol, right? The buyer's attorney calls you up, says, Sue, I need title. What then happens?
So, nowadays nobody's calling anybody up. So I get an email from the attorney with the contract of sale.
Okay.
Here's a tax contract of sale. Can you order title and get me survey quotes? Boom. That's it.
Okay.
It's no longer, it used to be they were filling out this application and then, now, just send me the contract of sale. And it's got everything in it that I need, literally everything in it that I need.
Okay, and what is it that you need?
I need the purchase price. I need the proposed mortgage amount if there's going to be one, and the lender if they have it. In many cases, they don't have the lender yet, but that's fine. That could be TBD. I need survey instructions because generally, if it's with a lender, they're going to want a survey. Some lenders don't require a survey, but I would say for any of the clients that I deal with any of the lenders that I deal with, they want the survey.
Mm-hmm.
Even all cash, I always suggest getting a survey.
Well, yeah, because it's again, in most cases, you can usually locate a survey. So then you're only just talking about, an
endorsement,
$100 inspection.
I had a deal in Staten Island. The guy's house next door was on their property line by like 3 feet.
What?
Yeah.
3 feet?
Yeah, 3 feet. So you can't have insured title when it comes to that.
Oh yeah, I had one where the next door neighbor put his blacktop driveway, just went right through the neighbor's property, by literally 30 feet.
Yeah.
It was insane.
What?
Yeah.
So get a survey.
Most buyers now want to know where their property line is. I have yet to find one that doesn't want a survey to know where they can put their fence up and all that other good stuff. So what happened in the case that there is no survey? Who orders the survey? Would you order the survey, or would the buyer's attorney order it?
So we generally will send the buyer's attorney three quotes from 3 different surveyors.
Okay.
It's a lot easier, and we use pretty much the same surveyors that we know that are going to get it done quickly.
Right, within a reasonable
amount of time.
amount of
We've never
time.
had problems with, occasionally we've had a problem with the survey, and then we drop them like a potato.
Yeah, because it's your reputation.
But they also know that if they, you're going to them so often that they have to kind of like jump up and, as far as you tell them to get something done. Because look, they drop the ball, you'll drop them. And, that's a big account.
There was a time back a couple of years ago when literally it was taking surveyors like 3 weeks. I'm like, you're killing the deal here. You got to hire more people, figure it out.
Yeah, figure it out.
Yeah.
So once you have the survey, then what? What else do you look for?
Well, so the survey is just one piece of the puzzle. So when we get the title order in, then we immediately order it through our examiners. Examiners being first out the examiner that's at the county clerk, where the property, the county where the property is located in, and then we have our municipal searches because generally, not all lenders again, but a lot of the lenders want municipal searches, but no.
It depends on product in my case. But
right.
You're 100% right.
But I will say to you, any attorney that wants to keep their license better order municipal searches. You don't order municipal searches to save your client, a couple of $100, and bingo, there's no CO on the property.
18 open permits, no CO.
Yeah, you got in your mind not to
you just literally lost your license to practice law.
There's no CO.
Yeah, I don't understand why penny wise, literally dollar.
Yep. Or if they have a CO for like a one story house, and next thing you know, it's like 2.5
dormered.
stories with like an extra garage here. So you really have, like, as an attorney, you have to compare the survey and what you're getting to what's on file with the CO, and you know, if they're obviously open permits, but if the CO says one story, one family brick house, and next thing you know, you see 2.5 stories with an extension with a pool.
I got a story about that.
Yeah.
Yeah, I did. A house in Levittown. This guy was a real Rube Goldberg, and he put on his own extension to a house in Levittown because he had pretty a lot in the property in the backyard. Put it on, and 20 years went by, and they decided to sell the house. And when you go into that part, it kind of like dips, and you see like waffling like that. And he didn't have a CO. And he's, I don't, I said, you need a CO. I mean,
and the big thing is if
danger.
If the town comes in and says you don't have a CO for this, looks at it and condemns it,
right.
Now half your house is missing. So that's the importance of making sure that everything is CO'd, that the town had signed off on it, because that's the worst that'll happen, is that they'll condemn it, shoddy construction, and next thing you know,
you're not going to get a fire underwriter certificate. No. I mean, there's so many things that stem out of. That's why rules are made. Follow the rules.
Right. So other than those types of searches for COs and building permits and stuff like that, what other searches are performed on the title?
Bankruptcy searches, patriot searches.
So, and what's the
red
purpose
light
of
tickets?
Yeah. So what's the purpose
every time?
So what's the purpose of the
judgment and lien searches? Yeah.
So what's the purpose of those searches?
Anything. So in the case of a purchase, all right, you're right. I mean, anything that you're running against the buyer, because it's a first purchase money mortgage, the purchase money mortgage takes precedent over anything on the buyer side. But the lender is going to want the buyer to clean up that,
right?
Whatever. But essentially, that's not affecting title, okay? But on the seller side, I mean, you're going to have those 100 red light tickets. They got to be cleaned up.
I've seen
and let me tell you, I've seen thousands.
The worst.
Yeah. No way.
Oh, you can't even. Yeah,
got to clean everything up.
And it's the worst. What happens? And the crazy things that like a lot of people don't understand is relationships between husbands and wives don't necessarily mean that a husband or a wife knows the inner workings of their counterpart. So I have been in plenty of situations where I have to explain to the person who is handling the mortgage side, which a lot of times it's only one of the two of them. And when I start to have to explain that their spouse owes thousands of dollars in tickets because this appeared on the title, and after the first set of denial that they're living in and they're done with that phase and they come to the acceptance that like this is absolutely against this person, there has been some fun conversations and arguments that have occurred because of that. So pay your tickets and then you won't have to tell your husband.
And let me bring up something that seems so simple yet is so crucial. Water.
Oh, well, especially now in Suffolk County, they're coming after you.
Yes. And also, water generally will go with the property and not with the people selling it. And a lot of people don't understand that an outstanding water balance on the account will actually stay with the property and it will not follow. So if I own a house for 10 years, I never pay my water, okay? Or I have a leak, one or the other. And next thing you know, I owe $50,000 in water and sewer charges, whatever it is. Yeah. Yeah, totally. So $50,000 I owe in water charges. And I'm like, well, I'm selling it. I'll just, whatever, goodbye. And it does not follow me, the seller. It stays with the house. So now I'm Mr. Buyer. I'm like, oh, thank you. Cool. I'm living in this new house. And boom, there's a $50,000 judgment on the property that I now own. And, I'm sure you've seen some crazy stuff with water, but, and don't believe what's on the bill, and that's the thing. People see the bill, and a lot of times it's on estimates.
Well, and that's just it. And it's retroactive. It goes back. So you really need to get an updated bill at closing, to the date or water reading. And if you cannot get that, then you need to have the seller's attorney hold money in escrow until
it's cleared
that
up.
Can be vetted out.
Yeah, because I've seen absolute nightmares when it comes to just water. And you think it's nothing. You think, I use water and in my bill, especially in some parts in Suffolk, it's like $30 a month or not 30. It's like, I think it was $60 or $70 for a quarter.
I used to live in Suffolk. It was fairly cheap.
Yeah. And
But New York City.
because I live in Queens now, so
They can pay more than your tax.
I did 2 loads of laundry. It cost me $106.
Yeah, I mean it's pretty substantial.
Yes.
You got to pay for it coming in and going out.
Mhm.
Yeah.
Oh, that's funny. So you said something about Patriot Search.
Yeah, so they want to make sure that you're not a terrorist.
Oh, is that what that is?
Yeah,
Which is
yeah,
kind
yeah.
of them.
That came out.
But I've had that problem,
came out of
like where
9/11.
Yeah.
and like one of these clients just had a common name flagged, and I'm sitting at a closing and just hours going by to get him cleared in regards to that part of it on the Patriot Act.
Yeah.
Like this was closer to 9/11, where it was
Mhm.
Yeah, it was
obviously far more. There was far more security going on with this type of stuff, and everything was being scrutinized. So that was problematic. And you have one of these common names. Forget about it.
Yeah,
Oh yeah.
it
And
is.
that
It
goes
is.
with anything with the title report because if your name is John Smith,
Mhm.
Jose Rodriguez, the title report is
Mhm.
that.
Okay, so other than that, what else is going in the search?
Taxes. So taxes are big. If you're buying a property off of a seller who hasn't paid their taxes, the taxes go to tax lien. It's a tax sale. It's scary.
First position.
Yeah,
Mhm.
it supersedes anything. Also with same with the federal tax lien, same thing. So yeah, you want to be protected against all of that. Make sure all of that is paid.
Super important, this title, people.
Oh yeah,
Yeah, and we talk about taxes too, just like water. It runs with the land. So it could be a judgment on the land. The property can be in a tax lien foreclosure. It's just one of these things that title and that's why title is so crucial to attorneys is that we need to know about what exactly is going on.
Yeah. So how many searches are really in this title search? Because I just counted 5.
Yeah, there's many.
there's many. I mean,
So how many more?
if it's
You could order more.
searches, what comes up, solar
Mm-hmm.
Well, the solar one
that
actually,
comes up.
I've had
There's
experience with that
always a UCC
recently.
one,
Yeah.
for the solar searches. I mean, you name it. Any sort of judgment,
Okay, so that you complete all the searches. When the searches come back, you review it, and then what? Then you pass it along back to the buyer's attorney, or
so the minute we get when we type the title report up, it goes out to the purchaser's attorney, the seller's attorney, the lender's attorney.
okay, so everyone gets it
Yes,
simultaneously.
they review. At the same time, if there are divots, there are problems with the title report, immediately I have clearance counsel. The attorney, his name is Phil Roman, and he's been in the business now. He's a little bit older than me, so he's in the business now maybe 41, 42 years. He knows his stuff, title. And so any problems, the seller's attorney can call Phil to clear up the exceptions, figure it out. A lot of times what we're seeing and have been seeing is old mortgages. I'm sure you're so there's old
these
mortgages. Yeah.
banks are like ridiculous.
Yeah.
We talked about it on our last podcast. Like they just don't file the SAT, and
Or they've
it's-
gone out of business.
Yeah, they got absorbed.
Dartmouth.
Yeah, yeah.
Dartmouth is a big one.
They got absorbed.
You know that when Dartmouth, forget it. They didn't file anything.
What was that one bank that I had a problem with? Washington Mutual.
There you go.
Yeah, they got acquired by Chase, and
They became-
Oh, they did?
Yeah, they became
Yeah.
Chase. But even so,
Eventually,
trying to track that down. It's like,
It's like Aquin too. It's the same thing.
yeah.
Yeah.
And I mean, that we could just IndyMac, like we could just go down like one after the other after the other.
Nationwide became Mr. Cooper.
Yeah, all this stuff.
Yeah.
It's crazy.
But we also have so if let's say it's actually against the seller and they just cannot get the SAT.
Mhm.
There are some companies out there that'll do it before you have to do a bar claim action. There are some actual companies out there that actually will be able to do the deep digging and get you a SAT. And they don't charge that much.
Oh, like that guy?
Yeah.
I'm actually really good at it.
Are you?
You go to the Federal Reserve website and you find out who the current bank is, and you just nag them and write letters saying that you're going to sue them.
Oh, well, you get paid by the hour. I don't.
Who says it? I'm a real estate attorney. You get
This
paid
guy
by.
charges like $300 and he gets it. We call him the,
So you could call me and I'll get it. I'm pretty good at it.
How much you charge? $250?
250 grand. Yeah.
I will. So I'll start referring to you. I refer
No,
to this guy.
no.
This guy isn't even in New York. He's in like Missouri. You know,
Oh,
Matt, what a
Yeah.
niche. What a
Yeah.
niche practice.
Yeah.
All you do is just
And we
track
gotta
down
hunt down
stats.
stats all day.
Why
I'd say
not?
we refer them probably 3-4 times a month.
Wow.
Easy.
What?
Yeah.
Yeah, there was a point in time
Or
where
even UCCs too, UCC 3s, because you get UCC 1s that are from like 1980, and it's the same thing. You know, when you have either a fixture filing or a real estate record for a lien on a property, to get a UCC 3. Well, okay, well, we could go.
I love when he like
He
puffs his
resets.
chest,
He resets.
puffs up, and he's like ready to say something clever.
But
Go ahead.
then I can't. No,
Why? Just finish. Finish.
I can't.
It makes for good TV.
We're recording. I can't say.
You know, it's funny. I had a deal going back last summer. It was believe it or not, a refinance, and a mechanic's lien showed on the property. And we reached out to the borrower. And the borrower was like, "Yeah, that was my freaking screwed up contractor. I'm not paying him. He didn't do the work." Well, the plumber that he hired did the work, and he never got paid. And boom, you got a lien on the property.
Mm-hmm.
That's not my fault. That's not my fault. I'm like, well, you got. Otherwise, you can't take out this loan.
Yeah.
Or we're going to have to hold an escrow, double the amount.
So is that the only way to satisfy a mechanic's lien, by taking 2x escrow for the amount?
We'll hold it until they resolve it. We'll give them a couple of months to resolve it. And then if they don't resolve it,
They pay it.
they're paying it.
Because you could always negotiate it. The borrower can always, or the buyer, the seller, if they're selling, if it's a borrower for the refi, they can negotiate it. So why would they want to just sit on it and then let title doesn't care? They'll pay out the full amount. They
It's not their money.
Yeah. So obviously, it behooves the borrower, if they're refinancing, or the seller if they're selling, to negotiate with the plumber.
And interestingly enough, with judgments, that's the one thing that's phenomenal. It's like getting your optimum bill lessened. You can negotiate anything.
Yeah.
You owe $10,000. I'll give you $5,000. Okay.
Yeah,
No, it's the truth.
It's going to have to get paid one way or the other in the next
They'd rather
couple
get
days.
that than get nothing.
Exactly.
That's like
interesting.
some violations in the city, ECBs, Environmental Control Board violations. For example, they, the title will hold double escrow for that. And you can probably negotiate it to about 20 cents on the dollar, and then get all that money back from title that they're escrowing, 100% of that money if you pay it out of pocket at the time. So those are some things that I always suggest. You want a quick closing? All right, put this in escrow at title, and then negotiate it with the city. And you get them.
Well, that's how I explain escrow at closing. It's only there to remedy in the case that you are unable to do it yourself.
Yeah. And then you sit on it and do nothing.
Yeah. And then you sit there and you're like, oh, I already got the big part of my check. I don't need that little part of the check.
Exactly.
Yeah. So what other kinds of liens show up other than mechanics, tax liens, other judgments? What else have you seen? I'm looking for the juicy stuff, Sue. Come on.
I mean, I can tell you what just recently happened. I'm in the middle of a problem that started with the pandemic. So if you recall, during the pandemic, there was limited access to the county clerk's office, okay, for the examiners. And so I have a very long-term client that had a guy that was just buying properties for investment, just one after another. And I was lucky to get these deals. And I get a phone call a couple of weeks ago. Hey, Sue, I just emailed you this easement. It never showed up in our title report. I'm looking at the title report. Okay, the title was July 2020. All right, I said, well, I'm not going to say the name of the attorney, but I said, oof, that was literally beginner pandemic. I said, let me reach out to my examiner. My examiner shot me back. We had limited access. We didn't turn it out because it wasn't there. It wasn't there to turn out. I said, what do you mean it wasn't there to turn it out to be there? Well, we had limited access. We weren't allowed, so we didn't. That wasn't turned out. And then she says, but you definitely had an exception in your title report regarding, indemnity for limited access. And I'm like, did. And so then I said, oh my God, I hope that the affidavit was signed. Get the file. Pull the file up, bingo. Affidavit was signed, giving us indemnity because there was limited access. But what did the easement turn out? The easement was from 1952, signed between 8 and 10. 8 and 10, Smith Street. Okay. And what it said was that 10 will erect the wall, but 8 had to maintain the wall. It was a 144-foot stone wall.
Oh boy.
We were insuring 8.
You were okay.
I'm thinking to myself, oh, I had to drive to the property. I'm not kidding. I couldn't even sleep. This was at night when he hit I had to get in the car and I had to drive to the property to see. I said, oh my God, this stone wall is caving in. So then I hit him back and we found out. I said, listen, I'm going to be honest with you. You could definitely put the claim in. Go ahead. But the reality is your client signed this indemnity. So I don't know what's going to happen. But yeah, that's a big one. Imagine a 140-foot stone wall.
I mean, that's some wall.
That's a wall. That's a wall. That's expensive.
That's a big wall.
That's expensive.
That's a lot of stone.
And it's stone.
That's a lot of stone.
Like it's a fence.
That's a lot of labor.
Yeah.
Forget about the stone, the labor.
That's when you just wait for everyone to die, and then it kind of the easement either goes away if not used, or if it doesn't run with the land, everyone that dies, hey, all right, cool, everyone died, no easement, and we'll carry on.
But interestingly enough, that was the first of the pandemic problems. Couple that with the Suffolk County hack.
Oh yeah.
We as title insurers are probably going. First of all, we're in the slowest period of our lives right now. And then once things start to hit and things start to move and sales start to happen and we start to get more titles, we're probably going to see a lot of claims from that period of time.
Because things will open up.
Yeah, everything's going to open up. People will now be selling. And so more title companies will be insuring and more things are going to crop up that were missed from 2020 to past the Suffolk County hack.
That takes me into my question. I don't know if you can answer this, but New York throughout the country has one of, if not the highest title insurance rates that people have to pay. Is that due to claims or just because we live in New York and they can get more money from people?
Oh, I think it's a combination for sure. Absolutely. I think it's a combination of claims. So when the claims come in, they come in.
I have a question. So from an early time in my attorneyhood, my mentor always taught me to, suggest the market value rider. Can you explain the market value rider and how you feel about it?
When I bought my house, it was new construction. I got the market value rider. I think that for the extra
$300,
it's nothing. If it even gets to that, it's just not that expensive. There's so many other things. You just don't. What if?
Can you?
Just don't know.
Yeah.
Can you tell the people listening what the market value rider is different than the title insurance?
It covers the gap between when you purchase. Let's say you bought the house for $500,000, and in the way things are going these days, prices are moving up 20, 30, 40% a year, it seems. Let's say you go to sell 3-4 years from now, or the value of the house in 4 years. Now you bought it for $500,000. Now the value is $2 million. All I know is that right now the median sales price in Nassau County is $750,000.
Easy.
For that 3-bedroom, 1.5 bath, 1,500 square foot house. I mean, it's insane. So, yeah.
I think it's pretty good.
If you earn a percentage off those numbers, it's phenomenal.
I think it's pretty good.
It is pretty good if rates were 2.5%, 3%. Not pretty good with rates at 7%.
Agreed.
I think we all can agree on that.
That's expensive.
But even still, even if the rate was today was 8%, that's still cheap money.
But it isn't cheap money.
It is if we consider because we're following trends. So if we go back 10 years,
go to the salaries.
Right, 20 years, but
it's not.
I mean,
it's not.
I'll give you for instance, I like
two generations,
and I like talking about my father because that's where a lot of this experience comes from. So in 1980,
it was like 17%.
Let's just call it.
My house in 85.
Let's just call it 85.
And I paid.
How much?
15%.
Right. I was just gonna say he paid 15% for the first house that him and my mother purchased. 15%. So there's no way that the salary of everyone likes using fast food workers. A fast food worker was making enough money to cover 15% interest, same as today. So if the interest rate was 15%, a fast food worker, even though salaries has increased, could never afford it.
I know, but you're not really. Take the fast food worker out of the equation.
But that's what the news gauges everything against.
But that's ridiculous.
Minimum wage, right?
Yeah.
None of them can buy houses.
None of them.
at any
Nobody
point in
can buy
time.
it. You
Right.
can't. But actually go with your college educated individual in the range of who was it? Who said 26 to 36 years old? Which one of you were saying that?
I said 26 to 36.
I don't know,
That's a
somebody
different
said
number
that.
you're talking about. If you're talking about Kleiger.
I forget what I did 10 minutes ago. So
Oh, okay. So I don't know.
Oh, 26 to 36 is the average consumer purchasing right now.
Right. That was your first
Yeah,
talking to you about it. Yeah. So think about it. So your 26-year-old is what, 3 years out of college?
3, yeah. I
You're
mean,
not making six
there's
figures.
a lot of there's student debt, but there's a lot of other things from that equation that are missing. Specifically, where they're getting the down payment from. They're getting the down payment from no, but that's how they're avoiding the PMI. Now, there's like little intricacies to the transaction that people are not really focused on. You know, they don't have a 26-year-old, like you said, 3 years out of college. How much are they making? Let's just say, for argument's sake, they're making 6 figures. They're making 100,000.
Which they're not.
They're not, but we're being generous.
Good for them.
They're making 100,000.
Extremely generous.
They absolutely do not have the down payment ability, the ability to put down substantial down payment. But where they're getting it from is from their relatives, specifically their parents, who are like, I don't want you living in my basement. Take this money and go.
I wish.
No, but
take it back to 1985 when I bought, and I was 24, and my parents didn't give me the money. You know, I was working 2 jobs.
Yeah, but it's different now. So I'm pointing at you only for I'm not pointing at you to point at you. I'm pointing at you because I'm going to make a point. The doctor that we closed during COVID, at the height of COVID, where did she get her down payment from?
Oh, yeah. But you know what?
Wow.
Doctor with a contract.
But she has probably student loans up the yin yang. So
Yes, but she did. But most people leaving college do have student loans. But that's where she got the down payment from. It's just I'm trying to show that that's where the trend is going.
Well, there was a recent news. I forget what outlet it was on, but discussing how millennials and whatever generation is above the millennials. I don't know what they're called, but that they're the generations of inheritance.
Yes,
and that they're inheriting the most wealth of any generation that ever came before them.
Oh, no doubt.
Yeah.
Oh, absolutely.
So,
because that generation before them is holding all the money.
Yes. We won't say which generation that is, but
I
mean, I could.
It's the baby boomers.
It's the boomers.
Thank you.
The
boomers.
The boomers
said
are
it, not
holding.
me.
Yeah, no. They're holding all the money. Everybody knows it's not a secret because a large portion of them have, in essence, paid off their property. So they're sitting on all this cash, and that's where they're giving it. It's I want an inheritance too, but
But they've but the reality is baby boomers are now living to 100, so they got to be careful.
Yeah, don't plan your home purchase on getting an inheritance from your parents. Just don't base it off of that. Do it your own. Do it your own way. Make smart financial decisions. Don't learn from me. And yeah.
Don't learn from any of us. Don't learn from any of us. Okay, so let's go back a little bit to title insurance. So now you get a report. Everyone's in agreement with your findings. Explain to us the insurance part of the title.
So the way it works, so when you say everybody's in agreement, what happens is nothing, if we're doing the traditional closing with a lender, nothing moves until you get the clear to close from the lender. The minute you get the clear to close from the lender, and assuming title is clear, and the closing date is set, and then we all go to closing. So at the closing table, you have your purchaser's attorney, your seller's attorney, your lender's attorney, and your title closer. And then your buyers and sellers, and then the real estate agents. Okay? That's how the traditional closing is.
Okay.
And it's still that way to this in New York.
It is.
Then the title closer will mark up the report, get the necessary affidavits to clear the exceptions, get the payoff from the seller's attorney, confirm figures of the payoff. I mean, generally, now since 2014, it's actually all done ahead of time because you want your closing disclosure has to be pretty much done. But you're doing this whole act at the closing table, and you should be done, assuming that everybody does their part. You should be done in under an hour, and then give the purchaser's attorney a copy of the fee title insurance policy, and you give to the purchaser the fee policy, the title insurance policy, and then you give to the lender's attorney the lender's title policy.
I want my markup.
Mm-hmm. And the markup, obviously the markup too. And the markup the markup shows everything.
Mm-hmm.
It shows the taxes. Okay, yes, I paid per continuation, or paid because we paid it by direct check, etc.
Okay. So from what I'm understanding is that the title insurance is ensuring the accuracy of the documents or the title search?
Well, first it's many layers. So the title insurance is first ensuring that there are no liens now on the property. Everything is now been cleared. All the judgments were cleared. All the mortgages were cleared. We freshened up the taxes. Everything is paid, including stuff that is post-closing.
Right.
Because most lenders want 60 days of taxes that are due to be paid up front. So the title company will take the April tax in Nassau County and the May tax in Suffolk County right now, and they'll set it to pay it. Okay. And then you'll issue the policies. You'll make sure that the deed is accurate, make sure the deed. So the way it works is, believe it or not, the mortgage rides this. So if the mortgage says you are John Samuel Doe and the deed says you're John S. Doe, no, you're John Samuel Doe. You have to go by what the mortgage says. So you will amend the deed to read John Samuel Doe. The sellers will initial it, and you'll make sure the meets and bounds description, which you're insuring from the title company, are the same as what's in the deed. You'll collect the transfer taxes. The seller has to, in Nassau and Suffolk County, they pay a deed stamped, and then in the boroughs, they pay an RPT as well. And if it's over $1 million, the buyer has to pay a mansion tax, which is 1% of the purchase price.
I love that tax.
And forget it, if you're out in Southampton, you're paying the pecan tax. And that tax is a pricey sucker.
Yeah, it is. But the thing is, it's becoming more and more common. I have to do less and less educating based on price. I said if you're going to break $9.99, you're going to pay the mansion tax.
Well, if you pay $9.99, someone's going to look at it and say, "Whoa, why is this $1,000 under $1 million?
Yeah,
what are we trying to do here?"
No, well, what's happening is if the property is listed at $9.99, they're doing it deliberately not to go over, right? And then here we come with the buyers like, okay, I'm just going to offer a little bit over, and then you break $1 million, but then they don't realize what they're doing.
Well, let the buyer,
their attorney will, or certainly.
I know exactly what's going to happen.
Or
it goes
their loan officer
yeah.
will let them know because it's going to be disclosed on the closing.
Look at his face.
I'm just curious about this. I mean, I'm in my 24th year of doing this, and the mansion tax has been $1 million in all 24 of those years. Was it always $1 million as long as you've been doing this?
It started at $1 million.
I mean, is this insanity?
Well, it's insanity now because, in Queens, $1 million is the 3-bedroom, 1-bath attached house with a community driveway.
I mean, are we honestly, can somebody bring this up to somebody and be like,
or like have it progressive or something,
I mean, how has this not changed in 30, 40 years?
It needs to be reviewed.
I mean, you got to be kidding me.
But it's not because it's more.
It's more tax
grab, but it's like, this is insane.
Well, Mr. Marcus, right up your alley, mortgage recording tax in Long Island, Nassau, Suffolk, compared to the city for mortgage recording tax.
Oh, yeah.
It's double. I mean, it's nuts. It's absolutely insane.
Yes, but by the same token, a mortgage sat in Queens is $47, and a mortgage satisfaction. Well, combined, it's what, $625
combined
now, $675. It was $750 minus $75 now. Yeah, so $675.
But still, I mean, what's the percent? I don't remember, but I know that the percentage in the city for mortgage recording tax is just absolutely insane compared to Nassau. You cross a border and you're paying double the percentage of the mortgage recording tax
because there's no oversight. And it's like, this is where I get frustrated. It's like right now, it's our government sits there and can scrutinize any industry it wants, but yet nobody gets to scrutinize the municipalities on the egregious things that they're charging. Like, you want to talk about consumer protection? And I'm going to go on a rant right now. You want me to get on a rant? I'm going to get on a rant. Who is making the decisions on how bad you are taking advantage of your consumers out there by your municipality versus sitting there and scrutinize? You scrutinized my business on the mortgage side. Thank you for cleaning it up. Okay, great. Now you're doing it to the real estate agent. Who's doing it to you? All right.
Go. Well, what about...
That's how you debate.
What about new construction? Everything falls on the buyer in new construction. All the
Yeah, they're
transfer
exempt.
taxes.
They're exempt.
Well, it's not that they're exempt, because that's not the case. What happens is
shift
they're
it over.
supposed to pay the transfer tax, but they shift it to the buyer. And so if it's in Manhattan, the
Yeah.
5 boroughs, you are
I'm doing
screwed in a
that
major
right
way.
now. I'm negotiating a contract
hundreds of
for
thousands.
new construction and transfer tax being shifted to the buyer, which is generally paid by the seller. I'm negotiating it out where the seller has to pay it. I'm crossing it out. I'll see how far I get.
Yeah,
but
that doesn't work when it's when it's related. Companies like that, it's not going to happen. They're going to be like,
if it's a one-off person, then you could do it. But
Yeah.
yeah, even sponsor deals, it's the same thing. They push off all their closing costs, even their own attorney. You will be paying their own attorney,
And it's like one guy did that 30 years ago,
And
and then
everybody
it's
just
just a
follows
rule.
suit.
Yeah.
It's unreal how some of this stuff works, where you're just like, how did that ever come to be?
Mhm.
So, and we're gonna get, because of what's going on in the real estate, there'll be many podcasts.
Oh, there'll be many.
many podcasts
Many.
on what's going on there.
disclosures.
No, like
All the litigation.
Yeah.
We're just gonna have to call it all of it.
the NARP side of it. Like,
Yeah.
obviously, the March 20th rule, which we covered in a previous podcast, and you've been, as you told me off air, like that you've been just explaining out the property disclosures and having those discussions. We're talking about the real estate commissions and the potential of inevitably getting to a point where this gets deemed unconstitutional. I'll get on that soapbox at some point in time, but today's all about title.
I'm gonna join you.
and to get back to title, because
Yes.
I've been wanting to bring.
I
this
see
up
you
in the-
ramping up over there.
Bring us
All right.
back.
Can we tell our listeners and some so-called real estate attorneys that permits, COs, and everything like that is not insured by title?
Say what?
It's not insured by title. It's for information purposes only. We provide you with all those searches for you to read them, for
Mhm.
you to understand them, and for you to know when there is an open permit, because it's there. We're going to tell you. And then if you can't connect the dots, open permit means not closed, means not CO. Well, yeah, that's on you. You have an open permit for a deck that ultimately falls apart. Well, you had an open permit.
I mean,
Never got inspected.
because I see that, and people have been doing this for 35, 40 years who still think, or I don't know if they think or just have this erroneous belief that this is something that's insured by title. Like, if all of a sudden you find that there was an open permit, like the day before closing, your seller just decided to go and take out a permit and on the house for some reason, whatever reason. I don't see why they would, but that it's not a title issue.
No.
And it's scary, and it's in the title report, but it's not part of what title insures.
But that's why they'll update searches at the very end for that exact purpose. Because, okay, let's give you an
It's not
example.
going to catch that thing that's just been done the day before.
Well, we're not going to talk about it being done the day before, because
Okay.
usually it
Because
wouldn't
it's not
be
gonna
like
catch
that
that.
crazy.
Yeah, I don't know why a
But
seller
what
would do
happens
that.
is a seller, but this could very well happen. Like, a seller is putting the house on the market. And we've seen this. They go out and they start applying for things that they need to get corrected without realizing that those need to be closed out prior to close, because they think that's what you're supposed to do. And it's like, which is crazy to even say that, because technically it is what they're supposed to do. Maybe not at the point where they're actually ready to sell, should have been way ahead of that, but we've seen that situation. Then the title might have been ordered immediately on contract. That hasn't popped. And then we get to the point where we update these at the end of the transaction, and then it pops. And that could happen. We've seen that happen plenty of times. And then you're just like, oh man, now we got to deal with this.
Yeah. I mean, there's always a surprise, I feel, in continuation searches, where something pops up and all of a sudden there's a new judgment or a new lien or a new anything really
that
can
can
pop
ultimately kill a closing.
up. Oh yeah. And I've had it where we're 3 days away from closing or 2 days away from closing, and then next thing you know, 3 months later, 90 days later is finally when we close, because they had to clean up something that came up last minute. And thank God for title and doing that, because it will and even stuff that's for information only, it's very valuable information for us attorneys.
Mhm.
Like, look, at the end of the day, I'm still a person in a business, and I have to look out for myself. And if all of a sudden an open permit or a CO or no CO shows up, I have to protect myself, and by protecting myself, I have to protect my client as well. And even though it's not something that's insurable by title, it's still something that is crucial to the real estate deal, and is also contemplated in every single contract. In my contracts, I always make sure that there are no violations, no open permits, and that's a condition precedent to closing.
I was going to, or I asked an expediter to come on the show. He said he'll come on in 4 months. That's your dad joke for today, ladies and gentlemen. That's your dad joke right there. Nothing makes me more happy than somebody telling me that there's an expediter involved. It's just like, oh yeah.
Yeah.
Okay.
I won't hold my breath.
Peter the Rabbit is my expediter.
I won't hold my breath for that one. I have too many bad stories with expediters.
I have one giving me a list of things after. There's a deal I have with 19 open ECBs, and among a lot of other things. And he's like, "Oh, well, they're missing apps, applications with the city, which are different than open permits." And he's like, "I'm going to give you a list of things." I'm still waiting for that, which means it's going to be voluminous.
Oh, we know that.
Yeah. So yes, thank you, expediters. But however,
well done, expediters.
We do love expediters when they're on our side.
Oh, yeah. When they expedite, we love them.
Yes.
Interestingly enough, I just recently had a problem at the closing table, believe it or not, wherein I called to verify figures on a mortgage payoff, and they said, "Oh, this payoff was sold. This loan was sold." When was it sold? Oh, 2 days ago.
Well, that happened a lot during 2007, 2008, 9, 10. Yeah.
I look and I said directly to the seller. I said, "Did you get any correspondence stating that this was being?" No.
Oh,
yeah.
He got it.
Got
their letters.
Oh, we got that. Oh, you didn't think to tell you?
Maybe tell somebody.
I didn't think it mattered.
No, of course not.
I'm like, oh, okay.
Yeah.
Meanwhile, the attorney ordered the payoff the week before. Not 2 days before. And I'm like, well, we can't do anything. We got to adjourn.
Yep.
Yeah, there's nothing to be done now. You got to get a whole new.
Now we got to wait and get a whole new payoff. We got to wait. Well, no, it could take 30 days.
Oh, yeah, because, you got to wait for the process to complete on the other side. I've been in that situation, too, usually on the refinance side, where it's one of those things where it's like, okay, this has been sold. I'm trying to track it. I know where it's going. The letter to the seller tells me where it's going. But if the bank receiving that mortgage has to go through their process, and like you said, it might be 2-3 weeks before all the stuff is up and running and now documented properly, where they can do their calculations and tell us what the payoff's going to be. So these things delay us, and it's one of those head scratchers where it's like, just with a little bit more communication, all of this could have been. If Woody would have went to the police, this would never have happened.
And then
I'm so old. Nobody knows what I'm talking about. But it's fine.
There was a time not that long ago when Mr. Cooper was just very, very difficult to deal with. And anytime they request always certified funds. I always prefer to send checks via attorney escrow rather than certified.
Because you can cancel it.
Right. And so, I'm getting a bank check I have no control of this bank check. It's generally from the
buyer side.
The buyer side, okay? And I've had 2 back-to-back instances, both Mr. Cooper. I show delivery because I FedEx them. I have it that it was delivered. They lost it internally.
So imagine if that were a bank check.
It's gone. And they were bank checks.
Oh, they were bank checks.
That's the problem. They only request, it has to be bank check. Well, the whole thing. And now I'm sweating because it could take them 60 days.
Yeah.
It's some place in the abyss at Mr. Cooper.
Yeah, they get so many checks.
Which they then, and then I find out I read an article on it. Mr. Cooper is a lipstick on a pig from Nationwide.
Nation Star.
Nation Star, right. Nation Star, lipstick on a pig.
Really?
Oh, yeah. They spent millions of dollars
Rebranding?
to figure out a name that people like and
Gary
makes
Cooper.
people and make hanging with Mr. Cooper. And
Cooper.
and so I always laugh at it. They spent I don't know how many millions of dollars to figure out a name that makes people feel warm, because Nation Star had such a bad reputation.
Mm-hmm.
So I guess they came up with Mr. Cooper. It makes me feel warm inside.
Yeah, same problems though, but it's Mr. Cooper. Yeah.
Wow.
So yeah,
Okay.
so it's and that's why, for example, FERPTA payments for when it's a foreign national selling property, they have to pay 15% of the sales price. Okay, I'm not going to get too deep into that, but sometimes it's a couple $100,000, and I always demand that it's an escrow check, an attorney Iola check,
Mhm.
because if it ever gets lost, you can simply cancel it and reissue a new one. That's the bad thing about bank checks. You send a bank check to the government. Okay, you're sending a bank check to the government, and what happens? 90 days later, you have to wait for it to clear the funds and back into the account, and then reissue another check.
Mm-hmm.
So I completely understand. And any bank, and correct me if I'm wrong, because you've been doing this a lot. Well, you've been doing this longer than me. I'm not going to say a lot, but now I just did. But now you get payoffs. You go and it's a bank that has a local branch. You go straight to that branch. Is that right? Because I know that's even worse.
Yeah, you do not do that. You have to go to whatever it says on the payoff letter. You go to a local branch, you could just kiss it goodbye. You don't know. You give it to Joe Teller. No. No.
Really?
Yeah, no.
So like Wells Fargo.
Good guy, Joe.
Joe, poor Joe.
I don't know.
Don't throw Joe under the bus.
I've had trouble with Joe.
Just Mr. Cooper. Mr.
Yeah.
Cooper is the one I sweat.
Mm. All right, you guys have any other questions? I know you don't have any questions about
I
it.
can't go on.
Very quickly, I'll just bring up Biden's little drop at the.
He fell again?
No.
State
He
of the, he was
talked
on a
about
bike or?
doing, instead of title insurance for lenders,
Yeah.
for lenders policy, doing a title insurance waiver and just paying just a small fees, trying to help borrowers out. So like
A waiver.
like deleting getting lenders insurance. In other words, you don't need a title company. Instead, it'll be some sort of endorsement that you'll pay instead.
What?
So
An
the
endorsement to
Fannie-
who?
to the lender.
Who's providing
To
the
the
endorsement?
Yeah, who's endorsing it?
Yeah, what
It's
letter?
just
Chicago
a-
title?
it's a-
That'd be
no, it doesn't even come from us. It's a title endorsement from the government.
Oh, great. Sorry.
And then Fannie Mae said, "Well, if that's going to be the case, no, then we're going to have to charge another fee for that, because if there's a problem, we need to be protected."
And gee, what do you know?
Oh, wait.
Back to
that. Wait, so wait. wait,
You didn't
wait.
hear about this? The way you didn't hear?
No.
I got my own problems. I got my own problems
I
with
mean, I just
this
I just,
NAR
it's
stuff.
only just scratched the surface. So I mean, it was just kind of like.
I'm starting to see a pattern.
Yeah, this thing that wouldn't go anywhere. Just because Fannie and Freddie aren't gonna sit there, and they're government-run agencies anyway. Inevitably, they'll just sit there and laugh at any sort of idea. And plus, obviously, at that point in time, Congress has to act.
Yeah,
to even
yeah.
get
It's gonna
that passed.
it's gonna look so funny. Oh wait, I got to endorse my own lending of my own money.
So what
Sure, let me just sign off on
To
anything.
point the finger.
self-insured?
Right, you won't.
You gotta
You won't. Wait, but it's my money. It's not going anywhere. I'll lend it to you, so I'll just take it back.
Let them figure out intercompany indemnification. Let them figure that out.
I can't even say it.
That's a good one.
That's a good one, right? You like that?
A little bit of alliteration there.
Yeah.
They love coming up with ideas without talking to us about it.
Oh my god.
Can you guys call us so that way we can tell you
Yeah.
how ridiculous your ideas
Seriously,
are?
don't forget that everyone's contact information is in the show description.
So you guys in the government can call us and ask us how to actually create rules that make sense for the consumer.
Mm-hmm.
I may have to charge you, and
There will be a fee.
and there will be a fee, and we will endorse it ourselves.
George Santos, don't call us.
Yeah, no. Okay. No. You guys have any? Okay, we're getting really bad with the joke. The Santos thing took me sideways.
Edit.
No, yeah, that's fine. We did. This is normal for us.
Yeah. I like when Jay turns red.
Yeah.
That means everything's going very well.
And now I
Very
got
well,
the bald head turning red too.
Oh no, it doesn't show up on camera, does
New
it?
sketch. I just can't wait for future podcasts where I can rant more.
Oh,
I just
it's
wanna
coming.
rant.
It's coming.
Oh, I can't wait.
So, Sue, give us some practical advice for ensuring smooth transaction, or what someone would look for in a title company if they were looking for themselves.
To purchase a title.
Right. So, there's some
When they
states and some
purchase.
municipalities where attorney is not needed. So a lot of transactions are done strictly with title. So can you offer them some advice as to what to look for, red flags to, avoid and stuff like that?
Well, so it depends on where you are. And I'm sure this podcast goes to all the states. So you have like
all the states, Canada.
So
we got 6 people in the UK.
The world. But in California, it depends on where you are in California, but the seller pays for the title insurance part of it. Some areas they split the title insurance.
Oh.
As close as Jersey.
Really?
Yeah.
Yeah. So it's really it's interesting. So it just depends. But since I'm a New York agent, I will talk strictly for New York. And and as much as I would love to say, go out there on your own and purchase title insurance policy, the real thing to do is to get a really good real estate attorney. And that real estate attorney will have a relationship, if they're really good, with a really good title insurance agent or direct, because you can certainly go direct to the underwriter. Either way, you're not paying a difference in fees. I think you get more personal service with an agency. I started out, it was just me and one other person that I had working for me. And then I blew it up to 24 people working for me pre-pandemic. And then by the time the pandemic had hit, it jumped to like 40 people.
Wow.
Yeah.
Yeah. So I pride my company on really being extremely service oriented. We answer emails probably within 5 minutes of the email going out where somebody's on.
That's pretty good.
It. Yeah, we're all excellent. I would say that my staff is phenomenal. They are all learned. They've been in the business, every one of them, for 10 years.
That's awesome.
Yeah.
Or more.
And I've worked with Sue before on numerous occasions, and you get that small feel that, people are there, that you can just pick up the phone and get that person, and you get that personal touch, but they have the capability of, a far reaching, technologically savvy and being able to really, get everything, make sure everything is airtight. So they have the resources of a large agency, but at the same time, you get that personal touch, which is always something that I look for. So,
and when
100%.
you're doing it so long, you've come across almost everything.
Well, that experience counts, right?
Oh, yeah.
So, definitely.
Awesome. So as we wrap up today's episode, a big thank you to Sue Baran for sharing her expertise on title insurance.
Amazing.
Yeah.
Thank you for having me.
As always, we'll have Sue's contact information in the show description if you want to reach out. And remember, knowledge is key in real estate, and we're here to provide you with insights you need. So tune in next time for more valuable discussions on Keys to the Castle. Until next time, this is Bisendra Melaram along Jason Kleiger, Jason Marcus, and the entire Castle team signing off, wishing you all the success and prosperity in your real estate endeavors. Goodbye for now.
As we wrap up this real estate adventure, remember, every key we've shared opens a door to your property dreams. Thank you for joining us on Keys to the Castle. If you enjoyed the journey, please take a moment to leave a 5-star review. Your feedback means the world to us. Don't forget to follow us on social media for the latest updates. And you can find our contact information in the show description. Until next time, happy house hunting, and thank you for listening.